Good morning, everyone. Hello and welcome to the weekly commodity audiocast. I am Kainat Chanwala from Kotak Securities Commodities Research Desk. And like every episode, we will navigate through the ever changing landscape of commodity markets, examine the events that influence market sentiments, and uncover the latest trends. So let's get started. So the markets experienced some volatility earlier last week, but most indices ended higher as investors navigated geopolitical tensions, President Trump's cabinet picks, and the anticipation of further Federal Reserve rate cuts. Stronger than expected US economic data, including a robust services PMI, helped key US indices post gains of nearly 2% by the week's end. The US dollar also climbed, surpassing the 108 mark for the first time in 2 years, as November's flash composite PMI in the US rose to 55.3, the highest level since April 2022, signaling strong economic momentum. In contrast, the Eurozone's PMI slipped to 48.1, indicating contraction, and Euro fell to 1.033 levels, marking its lowest levels since November 2022. Also, Fed officials expressed differing opinions on the future directions of interest rates, creating uncertainty in the market. The possibility of a rate cut in December became less likely, with the CME's FedWatch tool now showing a 52.7% chance of a 25 bips rate cut, down from 80% earlier in the month. The reduced expectations for a rate cut, alongside signs of a resilient US economy, boosted the dollar. Despite the dollar's rally, gold prices made a strong rebound, recovering sharply after a significant drop in the previous week. Gold surged nearly 6%, driven by safe haven buying amid escalating geopolitical tensions, particularly following Russia's launch of an intercontinental ballistic missile at Dnipro in retaliation for Ukraine's use of Western supplied long range missiles against Russian targets. Silver's gains, however, were more limited at 3%, with base metal prices remaining mixed. Technically, on the daily chart, MCX Gold December futures rose strongly after breaking over the hammer candlestick pattern, which is bullish, that emerged on November 14, 2024 at the 50% Fibonacci retracement levels from all-time high. Price posted the highest weekly rise, 4.96% in 18 months. Price is currently trading above 20-day EMA and 7.3 super trend, indicating bullish bias. We estimate the price to maintain its upward trend, although it might face an early resistance at 78,700, followed by 79,775 levels, which is an all-time high. On the other hand, initial support is at 76,000, followed by 75,400. Moving on to base metals, LME base metals struggle to find a clear direction due to concerns over US tariffs on Chinese imports and weak PMI data from the UK and EU, which raised doubts about the demand outlook. On the other hand, WTI crude oil surged more than 6%, reaching a 2-week high of $71.5 per barrel, driven by fears of supply disruptions amid intensifying Russia-Ukraine conflict. Given Russia's role as one of the world's top oil producers, any threat to its oil infrastructure has the potential to keep oil prices elevated. Technically, crude oil December futures on the weekly chart has formed bullish engulfing candlestick pattern. Although it's too early to foresee a reversal, we expect a positive bias in the coming week. On the upside, price may hit an early barrier at 6,300, followed by significant resistance at 6,500. On the other hand, the nearest support is at 5,800, which if broken might cause the price to fall even further to 5,625 levels. Talking about the best performer amongst the commodity space, natural gas takes the lead. NYMEX Henry Hub gas prices rallied more than 15% last week, buoyed by colder weather forecasts, increased gas flows to LNG export terminals, and decline in US gas stockpiles for the first time this season. Now, looking ahead, a series of US data releases before the Thanksgiving holiday on Thursday could weigh on investor risk appetite. Key reports including US consumer confidence, preliminary GDP, jobless claims, and core PCE, along with the FOMC meeting minutes, will be watched closely for clues about the Fed's next move. If US inflation rises unexpectedly, it could challenge the Fed's policy stance, while disappointing data could prompt a pullback in the dollar from 2-year high levels. Most importantly, developments in the Russia-Ukraine conflict will remain a key factor in shaping market sentiment. Russian President Putin's warning about potential attack on military facilities in countries that have allowed Ukraine to strike Russian targets underscores the high stakes of the ongoing war. especially as Ukraine has used US and UK supplied missiles in these operations. Besides Chinese new policy measures to support its export sector, as well as its willingness to engage in positive dialogue with Washington to improve cooperation and address differences, could offer some optimism for the metal traders. So, overall, this week, Russia Ukraine conflict and US economic data is going to drive the market trends. On this note, we conclude this edition of Commodity Audiocast and hope that we've offered you valuable insights. Thank you so much for joining in today, and we eagerly anticipate your presence with us again next week. Until then, happy trading. Thank you.